We are just a week away from Election Day, and the markets are waiting for clarity on who will lead the country for the next 4 years. Ahead of November 3rd, investors are starting to closely examine former Vice President Biden's plans to hike capital gains taxes. Robert Frank joins us right now. He has more on that front. Good morning, Robert.
Good morning, Becky. Well, one of the questions out there in the market is whether that big capital gains tax increase being proposed by Biden, that would be the highest rate since 1922, whether that's going to cause a big market sell-off if we get a blue wave. But only a fraction of stock investors, as some new research shows, would actually be affected by any increase. Now, according to research from Steve Rosenthal of the Tax Policy Center, only 25% of all U.S. stock is held by taxable accounts or investors who would pay a capital gains tax. The remaining 75% is owned by retirement accounts, not-for-profits, and most of all, foreign investors. Now, none of them have to pay a capital gains tax, so they wouldn't be affected by a hike. And on top of that, Biden's tax hike only applies to people with annual income of $1 million or more, so that's about 500,000 investors. So only a subset of that 25% would actually have an incentive to sell off before any tax hike. Now, Rosenthal and others don't doubt there could be a sell-off if we get a blue wave, but they think the corporate tax hike and lots of other big factors like stimulus would be far more important. Guys, back to you.
Hey, Robert, do you have any idea how much this might raise if they do increase the capital gains tax by that much and it only affects about 25% of the people out there? And then second of all, what have we seen in past tax increases?
So on how much it would raise the first year, assuming that this started in 2021, it would raise about $5 billion, so not that much. It kicks up to $30 billion or $35 billion in the next sort of 2 to 3 years, and then it drops off again. So relative to, let's say, the payroll tax increase, it's not a huge number. I don't know whether the Biden campaign has factored all of what I'm talking about into their calculation. As far as in the past, in 1986, we had that tax hike under Reagan when it went from 20 to 28%. We had big stock sales, big capital gains realizations, but the market was strong. And that's because markets react to much bigger macro forces like, at that time, deregulation and a stronger economy. So, yes, it results in stock sales, but it doesn't necessarily drive the overall direction of the market, Becky.
I was just thinking, Robert, what about people that own businesses or people that own property or people that own anything that's not a stock that they own, and now they're going to have a much bigger capital gains? Doesn't it just gum up the works? Doesn't it just... Isn't it a damper on economic activity in that regard, or no?
In the short term, it actually unleashes a lot of selling. We're hearing, to your point, a lot of real estate, a lot of private companies getting teed up for sale because people want to get out ahead of that increase. And then you have a big fall off. That's what we've seen in the past. But you're absolutely right. It distorts a lot of things in the market. My point is not necessarily in the stock market, but throughout the economy, it distorts things because you have that short-term pre-selling going into the tax hike, and then it drops off after that for a while. It takes years to recover.
Shepard Smith here. Thanks for watching CNBC on YouTube.